Alright, let's dive into something that might seem like a small tweak but could actually have a pretty big impact on how people save for retirement. Here's the deal. The Pension Fund Regulatory and Development Authority, PFRDA, just extended the same-day investment deadline for the National Pension System, NPS, from 11 a.m. to 1:30 p.m. Now, on the surface, that's just a change in timing, right? But personally, I think this is way more interesting than it sounds. What makes this really interesting is the why behind it. PFRDA says it's all about improving the subscriber experience and operational efficiency. But if you take a step back and think about it, this is actually about making retirement savings more accessible and flexible for everyday people. Here's what I mean. The NPS is already designed to be a tech-driven, transparent system for retirement savings. But by extending this deadline, PFRDA is essentially giving people more time to get their contributions in and still qualify for same-day investment. That's huge because, let's be honest, not everyone has their finances sorted by 11 a.m. Life happens, right? Bills pile up, work gets busy, and sometimes you just forget. Now, with this extension, more people can take advantage of same-day investment, which means their money starts working for them sooner. One thing that immediately stands out is how this aligns with a bigger trend in personal finance, making investing more inclusive. What many people don't realize is that small changes like this can actually encourage more people to save for retirement. If the process feels less rigid and more accommodating, folks are more likely to stick with it. And that's exactly what PFRDA seems to be aiming for here. It's not just about efficiency, it's about removing barriers. Now, let's talk about the operational side of things. The extended deadline applies to all major NPS payment channels, government nodal offices, points of presence, ENPS, UPI, you name it. This raises a deeper question: how will intermediaries and stakeholders adapt? PFRDA has already instructed them to align their processes with the new timeline, but let's be real, anytime you change a system, there's a risk of glitches. A detail I find fascinating is how PFRDA is proactively addressing this by emphasizing seamless implementation. They're not just throwing out a new rule, they're making sure everyone's on the same page. From my perspective, this move also highlights how regulators are starting to think more like consumers. What this really suggests is that PFRDA is paying attention to the pain points of NPS subscribers and trying to fix them. That's a big deal because, let's face it, financial systems can often feel impersonal and rigid. Here, we're seeing a regulator actively working to make things better for the average person. But here's where it gets even more intriguing. This change could have a ripple effect. If more contributions qualify for same-day investment, that means more money is being invested sooner, which could potentially boost overall returns for subscribers. In my opinion, this is a win-win. Subscribers get more flexibility, and the system becomes more efficient. Of course, there's always the question of whether this will actually make a difference in the long run. Personally, I think it will, but it depends on how well the change is communicated. If subscribers don't know about the extended deadline, it doesn't matter how great the policy is. So, PFRDA and intermediaries need to get the word out, and fast. To wrap this up, what we're seeing here is a small but significant step toward making retirement savings more user-friendly. It's not just about changing a deadline, it's about changing the mindset around how we approach financial planning. So, here's my closing thought: if regulators keep making these kinds of consumer-focused changes, maybe, just maybe, more people will feel empowered to take control of their financial futures. What do you think? Is this a game changer, or just a minor tweak? Let me know in the comments below.